We should be live streaming in a minute. Yeah. All right. So I want you to have a look at, one second. Just moving my stuff. Give me a sec. One second. One second, guys. Give me a sec.
You got a bunch of chapters in your book, but when they closed that book, how good was the book? How good was your book? What was the ending to your book? If the ending to my book can be so amazing because of all that was done.
We all like to take this 4-lane highway, the easy highway. It has fucking signs, it has restaurants. We all love that 4-lane highway. We always step over the shovel. And all I did was I picked up that fucking shovel, and that shovel, I made my own path. And you may have big boulders and shit. They may be getting 200 miles up the road faster than you, but going through this path of life, this journey over here that you make yourself, that's incredibly difficult. When it comes out the other end of that, there is some glorious shit that you can't even explain to people. And we're afraid. Bottom line is most of us
Where are we? Yeah, so we're going to be looking at obviously liquidity and then being able to identify, when this market takes liquidity. And so have a look here. We're looking at this, say for example, these markets, we know below all of these areas are areas of liquidity, below here. The market can decide to take whatever liquidity it wants to take first, and then we expect to see a retracement. Now we either sit in the retracements because we understand that's how the markets move, yeah, or we get out, we get out of positions, okay? Now that depends upon our entry, and I wanted to show you guys obviously some things that we can look for, all right? So on a 4-hour time frame,
motion detected at your front door.
I'm going to scoot out and I'm going to show you something, all right? So let's say for argument's sake, this is a little playbook, all right, that you guys can have in regards to helping you. In regards to helping you to identify when there is an opportunity for you to get into the sell, all right? Now, this is a random pair. I'm just looking at JFA randomly, but I'm trying to show you, all right? So say for argument's sake, it's still about location. So we still go through all the normal processes that we go through to identify the high, the trend, putting on our trend line and that we're in a premium, etc. But this is what I want you to look for. I want you to look for areas of liquidity. And liquidity, as you understand, is anywhere above swing highs or swing lows, or definitely equal highs and equal lows. All right. That's where you're going to find liquidity below your equal highs and your equal lows. All right. We can see here right now, this one's doing well, pushing down. Anyway, below your equal highs and your equal lows. Okay. Now, let me see. Now, what you look for is on a 4-hour time frame, you're going to look for this wick. You see this, for example, this liquidity here. You want to look for a candle that pushes up and captures liquidity. Okay. It doesn't have to be just a 4-hour candle, but I'm showing you in this 4-hour. You want to see a wick capture liquidity, long wick to the upside. All right. Once you see this long wick, let me show you as well also. 2-hour. All right. So you can look for in the 2-hour also. You see these wicks capture liquidity. Yeah. At that point in time, let me drop down to an hour, show you something. At that point in time, when you see on a 2-hour or 4-hour, these long wicks, okay, these little John wicks. 1 second, just securing some capital. All right. Then you're going to look for entries. You're going to look to see a break in structure, which is normally dropping all the way down to your 15-minute time frame, okay, or your 5, okay, if you understand the strategy well. Let me go back so I can mark it. I've just lost my spot. All right. And we're going to look at this on a few different markets. Let me just mark my spots because I'm losing it. So here on this yellow line, all right? So say, for example, when you see that 4 hour, because this is on a 4 hour time frame, and you see this wick to the upside that closes back down here, all right? Closes back down. Normally, you want to see even below this level, but this is still fine. We're looking on a JER 30. I thought we was on GU, all right? At that point in time, you want to be looking for ICC in the direction that we want to trade within. So from that premium, that ICC is going to be an indication, correction, continuation. All right. So if we go to, let's say argument, so let's just go to our 5 minute time frame. You're allowed to get down to your 5 minute, and to be fair, that's going to present you the most opportunities. All right. You're waiting to see. Have a look at this. If I was to draw some lines in, these lines will look like this. All right. And you know why they'll look like that? It's because you will be touching the last low before the highest point. Okay. And now you're waiting for indication. Yeah. You're waiting for some sort. This isn't a great example, but you're looking for some sort of retracement or consolidation to happen, as you can see over here. Okay. In here. And then you're waiting for candles to close down below. Now, this here, potentially, if you wanted to be safe and you wasn't very aggressive, this is just in the JER 30 market. I'm going to use GU because it's a bit more comfortable in a minute. But obviously, your safest stop will be up at the top here. Either way, you see that this market from that point went to hell. If you went very aggressively, of course, you could have gone just above where the market started to retrace, which is an aggressive entry. Both of them, you would have been good. Let's go and look for it again on the GU, as I mentioned. All right. Let's look for it again on the GU and go to our 4 hour time frame. Let's go and have a look to see if we can get that energy again. 1 second. I'm just trying to squeeze out some more. All right. So let's have a look. We're looking at our market, and we're identifying, the premiums and the discounts, okay, in that level, all right? So for argument's sake, have a look here. Let's imagine that you was looking at this bullishly in this little energy here. So if I was to rewind this back here like so, and you're thinking to yourself, okay, this market is making these are higher highs and higher lows. This is the 4 hour, this is the weekly candle. So I didn't realize I thought it was on the weekly, but it works on all time frames. It's the same principle, all right? If this market was here, if this market, for argument's sake, you was in this market here and this market was doing what it needed to do, and you'll figure to yourself, okay, I'm looking for an opportunity to get in. Imagine you drawing your lines like so. You're looking for an opportunity to get in. You want to see this, you understand that there is liquidity below these levels. And if you see a candle push down there and close just with a long wick, like so, wait for it. Push down here. Oops. And that long wick, I want to rewind a little piece. As soon as you see that candle close after grabbing the liquidity below a level, and it's just it closed as a wick, you should be looking for entry opportunities to get into this trade. Obviously, this is on the weekly, it was an accident, but it just shows you the same principle. At a point when it goes down in there, if I drop down to my 4 hour and looked in here, this is the same area, I'm looking for entry opportunities. And if I was looking on this massive 4 hour time frame, an entry opportunity could have easily been, I was telling myself indication, correction, continuation with my stop below here. That's the safest place for my stop. Okay. Let's go and look at it on the smaller time frame, because I did think the weekly, I didn't realize I was looking at the weekly or 4 hour. Okay. Let's have a look on the smaller time frame. We drop down to our 4 hour over here. Okay. Drop down to our 4 hour over here. And we are looking at it. All right, I'm just trying to look for some random places, all right? So here on the 4 hour, can you see here, for argument's sake? Look, imagine, I'm pulling this back again. And I want we're going to back test this for few different pairs. It's just an extra bit of confluence that you can add to your trading. So let's say for argument's sake here, this market has got some bullish momentum, breaking some structure, pushing up. The momentum's pushing up. Yeah, you can see higher lows. You can see it breaking structure, pushing up high. Every time we're looking at this market, we're identifying these levels. All right, have a look. If I was to draw them in, we're identifying. Oops, we're identifying these levels. We're identifying. If we can do something, we're identifying these levels. We're identifying these levels. Yeah, we're identifying these levels. Now, if I was looking for a great buy opportunity, I'm placing my alert, and I want to see a candle on a larger time frame, 4 hour, 2 hour, 1 hour, even. All right, I want to see it push down there, but close with a long wick, a little John Wick. See it? Do you see it? This here, as soon as I see this, grab liquidity from below this level and close all wiki, I'm going to be dropping my time frame down. All right, 15. I can see the entry on the 15-minute time frame, indication, correction, continuation, or 5, indication, correction, continuation. Yeah, and we're away. Okay, and the point is that this happens on all time frames because this is about liquidity. And if you want to understand what I'm saying about liquidity is the fuel of the market. It's the fuel of the market. Let's go and have a look at it right now in present time. All right. Let's look at it at present time. Let's delete some stuff. Delete some stuff. Delete some stuff. Look at it over here. All right. If we're here in this market, the market is pinged, it's ponged, it's making higher highs over here, breaking some structure. It's come down here, made a higher low. I'm looking, and I understand there's liquidity underneath these levels. Yeah, I understand this. Have a look. I'm looking for this to take liquidity, but close with a long wick. As soon as I see that on a decent time frame, yeah, look at it on the 4 hour, look at it on the 2 hour, even on the 1 hour in this instance also. All right. As soon as but obviously the 4 hour, you're waiting for it to close, which is a longer period of time, but either way it is what it is. All right. As soon as I see that John Wick, all right, even if I'm dropping my time frame down, you can get all the way down to your 5 minutes, or let's mark it, sorry, because I can't see where that wick was. Let's say for argument's sake, we're here. I'm dropping my time frame down. And what am I looking for? Somebody tell me what I'm looking for. I'm looking for indication, correction, continuation. All right. Now, in this instance, your safest place that you would have been would be below the swing lows. So for now, I want us to always go for below the swing lows. All right. Because when we go below the swing lows, we're going for the safest place. In this instance, because of the way the market was pushing up quite shallow, executing your trade up here, what is the problem with this trade? What's the problem with me placing my stop over here? Let's see if anybody understands what the issue is. What is the problem if I want to buy and I put my trade and my stop all the way over here, opposed to putting it down here below this swing low? What is the problem?
There's still imbalances there.
There are imbalances, and there's something else which is even more so that I want you guys to tap into. It's not that, and I'm going to give you a clue. It's about where we are in the range.
Oh, middle of the range.
1 second. Over here, we are near if anything, we're more premium than discount over here. I'm saying if this is the indication, let me try and draw, maybe you didn't see it. This is an indication, breaking this structure. This is some sort of correction, and we're waiting for a closure, and that closure didn't come to somewhere around here or even over here, for argument's sake. All right, indication, correction, continuation. The problem is that At that point in time, even if I place these top lines here, well, we wouldn't have really known, all right, to be fair. We wouldn't have really known. But even if I place use these data points, which is incorrect, to be fair. I can't really use those data points. But the bottom line is this. You want to be placing your stops. You want to be placing your stops below the swing lows, at least so you can get your win ratio up. All right. This is still small. Yeah, this is only, like, I mean, it's not tiny, but at the end of the day, you place your stop in this. Oh, I tell you what, this is not a great example. This is not a great example. Apologies. This isn't a great example. In fact, it is. Yeah, let me show you why. Let me show you why. Because you'd be touching some data points, like so. All right, you'd be touching some data points like so. All right, it's not a great example for where we are on the bigger range. It's just an example that I saw straight away, so I thought I'd jump on. All right, so we will find a better example. Okay, but the point is, placing your stop below the swing low is always the safest place that you can place your stop. All right, we can try and go for uber aggressive here and this, down the third, but the bottom line is that we want to place our stops in the places where we're not going to get stopped up. It's that simple. We want to place our stops in places where we are not going to get stopped out. Yeah, we don't want to be out here placing our stops in places whereby we know we're just going to hear douche straight away. Do apologize, guys. I'm trying to multitask. I am managing some trades, which is the same to the GU and the JER 30. All right. And if we hit play, all right, we can see how this market. Now, the issue is at this point in time, when we see a reaction from up here, then we've got at this point in time, we've got this data point and this data point, then we can understand where the ceiling is of our trade. That's the issue. All right. It's the issue with this trade. Yeah. Not an issue, but from time we seen this data point and this data point, we have some parameters now to say this is the range that we're trading within. Okay, so we know that this is going to be a bit more of a slower trade where we're going to see retracements back into this red area. Keynes comes into this area, pushes up at the top. Let's hit play, see what happens. Respects the bottom of the range, pushes up, makes a higher high. All right. Now we're at the top of the ceiling. Let me pause it. Now we're at this ceiling, which is Russian doll, if I've drawn it correctly. And we are concerned about whether this market's going to turn around right now. In this instance, we bust through that ceiling and start making a new range. Okay, I'm going to show you this again on a different pair. I want you guys to keep seeing this. It doesn't happen every single time. Not every time, but yes, every time. But sometimes you're not going to be able to see it every time because sometimes it wants to take liquidity from a smaller time frame. Let's have a look. Let's start with these markets how we want to do. So this is, say, for example, here, we can see these lower lows, low highs, lower lows, low highs, all right? This market, we've made a little range here, okay? This is gold. And I'm going to go to my 4 hour. Sorry, guys, I'm all over the place this morning. All right? And we can see, for argument's sake, if I was looking at this trade, a little bit like this market, here, if you can just look over here, let me give it to that. We can see liquidity above this level over here. All right, lower low, lower high, lower low. There's some liquidity above here. All right. Now on a smaller time frame, look, as soon as I see this 4 hour candle, this is a 4 hour candle, close with a wick capturing liquidity, like just a wick. It wasn't a solid closure above it. There was a wick capturing liquidity. I could be dropping my time frame down immediately. If I go all the way to my 5 minutes, looking for entries. Okay, so look, it wicked up in here. This is the whole, all of these candles here constitute as the 4 hour. All right, so even though this yellow line in here, this is all the 4 hour candle. Remember, this is 5 minutes, so we're going to get a shitload of candles in here, constituting as our 5 minute time frame. All right, so we're looking in here. As soon as we see this, watch, indication, correction, continuation. Yeah, that could have been us in the trade at that point in time. There is a better entry. The better entry is the fact that, have a look. It's like, it's not a better entry. There is no better entry, to be fair, in this instance. There is a aggressive entry above this high, and then there's the safer entry above this swing high. Okay, the aggressive entry, you'd already seen yourself at a 1-to-1. Aggressive entry, you'd be in profits, but the market is still going, in fact, is it? Yeah, still going sideways. All right. Now, what does that mean on the bigger picture for this gold? It may mean that we're going to, and have a look how this market, look at it on the other side. Look at it on the other side. If I go to an hour, look at it on the other side. Below this level, we assume there's liquidity. You see a candle close down here, quite a large candle, 1 hour candle. Let me see if we've got 2-hour candle. We've got 3-hour candle, and we've got a 4-hour candle that has an hour left. All right. So as soon as that candle closes, it might be the case that we're looking for, even on a smaller time frame, this market might decide wants to push back up into these levels. This isn't great location wise, because I'm saying to you, we want to just be taking the trade from a premium. But I'm saying to you, even on a smaller time frame, get down to our hour, we see that liquidity taken by a wick. And then on a smaller time frame, let's imagine I saw this happen on a 1 hour time frame. Immediately, if I wanted to trade against the trend of this, if I believe that we've traded from a premium, this market's going to be falling down as a sell, which I actually believe that's the case, but gold might get stubborn on a Monday and push up in here. But as soon as I see this wick grabbing liquidity and closing as a wick, I can drop my time frame down immediately. I'm just using this yellow line as a guide to my smaller time frame. I say 5 minutes for you guys, which is small enough. In this instance, it's not very clean you being able to get in on a 5 minute, because we've seen all of these green candles. I'm going to drop to a 1 minute just to show you the example. On a 1 minute time frame, because the 5 minute wasn't giving us clean enough structure, as soon as we get down in here and that liquidity is grabbed, I'm looking for what I'm looking for. Here is some structure over here. Last high before the low. Indication, correction, continuation. I'm in the trade. Aggressively, this is below the last low, safest place over here, and the market is running to profits and doing the hokey cokey now. All right. The point I'm making to you is this: all of those examples weren't great. As in, when I say weren't great, it's because obviously we want to start from the start, which we're going to do now. We've got enough time. We're going to start from the start, breaking down a trade. Probably we'll do GU or something related, US 30 we might even do. Yeah. And we want to make sure any trade that we take, it has to be from the right location. I'm showing you these nuances so you can understand, oh yeah, liquidity, boom, above these highs. Oh yeah, on a higher time frame, let me see them. All right. But that still has to be from the right location. All right. So let me try and do that. But either way, it's good that I'm showing you it, just that even in the wrong location, the same thing happens, because liquidity come like food. Do you understand what I'm saying? It comes like that energy, that lifeblood that the markets need. All right. So say I'm looking at this market here for argument's sake. I'm looking at this market here. So look at it. I'm going to point out all the places that I quickly see it with my eye. Can you see it here? Oops. See it here. There was liquidity below this level here. The market took it, then left. Okay. Pushing up. Even on the smaller time frames, if I was to drop down, maybe on the 4 hour, you can't see because how the speed of how it's going. That's what liquidity is. Over here, there was liquidity over here. This market wicked up and closed with a wick from taking this liquidity. In here, very small, we could be looking for entries. Yeah, we could be looking for entries. Now, when the market is running down in this, these are the reversal areas. All right. So if we was looking over here, we'd be looking over here and seeing, okay, that here we've got liquidity below here. We've got liquidity below here. Remember, these are big time frames. Though they might look tight to you, this is 4 hours. When we see this 4 hour candle come over here, have a look, and close like this after grabbing liquidity from below this level here, for argument's sake, we don't know if it wants to take this one straight away. We don't know if it wants to go and take this straight away. But when we see it close, a 4 hour candle close with this wick scenario, let me put my yellow line back in here. We are dropping our time frame down and we're looking for entry. remember, this is another little playbook, another little flex that I'm giving you. All right. As soon as we see it, all of these candles here constitute as a 4-hour candle. All of these candles here. Yeah. We are going to be looking for that entry. Yeah. In this instance, we could see, you could even say that where is a 4-hour candle close? Not at 10. That wouldn't make sense. Let's go to our 4-hour candle. Our 4-hour candle close between 10 and 2. And just because I've dropped it down to 5 minutes, there's lots of 5-minute candles in that 4-hour candle. So I'm trying to see what range we're dancing in. Yeah, we are in here, 10 and 2. Okay, so this is around here, 2. We're still looking for our in there. That's still the 4-hour candle. So when this 4-hour candle closed here at 2 o'clock, I'm looking for my entries. I'm looking for indication, correction, continuation. This could have been my indication. This could have been my retracement. This could have been my continuation. At that point in time, or my correction, that could have been my entry. My stop could have been in the safest place below this lot, this swing low. Okay, I'm in that trade and I'm moving into profits. Okay, obviously an aggressive entry would have been here and probably taking into consideration your imbalance. But I'm just showing you, even without the aggressive entry, you could still be playing ball. Yeah, you could still be doing good things, even without the aggressive entry. All right, let's go and look for it again. All right, and when I say on a larger, look, can you see it? Like, for example, all of these wicks, have a look. Everywhere you see these wicks, this is a falling market, bearish. There is liquidity above this high here. Okay, soon as this market wicks up here on a 4-hour candle and closes, yeah, closes down here, you could have been looking. Let me show you again. I'm just doing randomly. I'm showing you randomly. In this 4-hour candle, which is from 2 o'clock. All right, so it's from 10 to 2 again. All right, and you could have been looking. So let's get back to that yellow line. I think this is the one I was just looking at. Was that the one that we was looking at? I don't know. Let's check. No, it wasn't. Yeah, it wasn't the one we was looking at. We was looking at this one over here. That is the 15th of April. Let's put it in here. Let's put it in here. What's going on? What is going on? My charts. Let me refresh my charts. I don't know what happened. So as well as understanding the basics, the fundamentals of our strategy, understanding where is premium, understanding where is discount, understanding the market likes to go for imbalances, understanding all of these things, I'm showing you, I'm giving you another flex, okay? I'm giving you another flex, another bit of that you can add to your confluence of understanding. When you see a large candle, I'm saying 4-hour, guys, I've absolutely lost wherever that place was, all right? We'll go and do it again. We'll find another one, all right? That is another great way of saying, interesting. Let me see if I can get in. Let me see if I can see any entries for me to get in. And you're allowed to go down as 5 minutes. You've seen certain times I've had to drop down to 1 minute because you just can't see the structure. If you have to do that and you're not comfortable with understanding and seeing what's going on, don't drop to your 1 minute. Just go find a different trade. Okay, some markets move faster than other markets, and they're not going to give you the structure you need to see on a 5-minute time frame. Yeah, if you're not comfortable looking on a 1 minute, just leave it, go to another one. But I'm showing you how liquidity, and there are signs when liquidity is taken that can allow you to say, okay, I'd like to get into this trade. Here we go. Now this is GU. Have a look at it. All right. If I'm looking at everywhere, I can see everywhere. So my eyes and your eyes need to be drawn to the wicks. So this is a bullish. Let's say, for argument's sake, we can see that this is a bullish retracement in here. We can see that this market is making a bullish retracement. Yeah, for argument's sake, however you want to draw these lines, it doesn't really matter. But we can see that this market is making a bullish retracement. There is bullish energy coming in here, bullish energy coming in, here. Whoops. We can see that. We can't not see that. We can all see that energy. Delete that one. Now I want to zoom in to that energy for you so you can see what I'm talking about. We have already come to the notion that it's bullish and therefore we're going to be looking for buys. When this market came down here, this was the low. As soon as I see this candle wick down here and close with a wick capturing liquidity, I'm looking for entries. I would have been in, riding this up. When this market started making a retracement, there is liquidity below these levels. This is a retracement. On a larger time frame, if I still look at on a line chart, look, this was a level, this was a valley. Yeah, as soon as I see my candle close with a wick, 4-hour candle here, close with a long wick, capturing liquidity, I'm looking for buy entries. Look, I'll be going, I'll be away. All right. This market made a retracement in here. Remember, look, even this on a smaller time frame, look at the time. All right, I'm going to show you between 10 and 2. All right, 10 and 2. I'm giving you some source, guys. I'll write it down on the screen in a minute. Yeah. So if I was here between 10 and 2 and I saw that candle at 2 o'clock, why is 2 o'clock significant? Why is it a good time around 2 o'clock? Why is that a time that's quite interesting? Does anyone know? Does anyone know why that time's a bit interesting?
Is that when the US opens?
Yeah, it's getting close to US Open around about 2:30. You're correct. So things start getting active around about that time. So it's quite interesting around that time. So when you see that, look, nam, 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 that liquidity being taken, I'm then looking, obviously this is not a great location because we're in the middle of a range, but I'm just showing you. After that happens, I'm looking for an opportunity to be able to get in on that trade. Yeah, if I drop my time frame down to 5 minutes, I'm looking for an opportunity. Let's have a look over here for argument's sake. This is a better location at the bottom of the range. Even though we're near the top now, I'm trying to show you guys, I'm combining these things. This is our range. Yeah. Down here, we understand is buy territory. That's why I said the last one was a little bit funny because it wasn't in buy territory. If I see that the market's made a retracement down into these levels, and here, I'm looking at that below any level like so, we have liquidity. And if I see a candle do this, capturing liquidity, nam, 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 and closing back above, I am looking for buy entries. I'm getting my entry from a demand area and market's doing the most, pushing up. Okay, let's go and look at it somewhere else in regards to the market in a different direction. Let's look at it now. The market's come up all the way up into this premium up in here. This is the big hard Russian door, hard ceiling, touched into this premium. And then we've started to see bearish energy coming into this market like so. All right, started to see some bearish energy coming into this market like so. Let me make that a different color. Let's go and try and have a look between our, 10 and 2. So let's move back over here. Nothing too much on the big 4-hour over here. But let's look over here for argument's sake. 10 and 2. This is this candle over here. This is on a 4-hour time frame. We're in a premium area. You see the markets push up here, wick up here, taking, it's not a magnificent example, the liquidity from above this previous candle over here. So remember, above these levels, we've seen the kind of wick up, come and close back down from a premium. Yeah, from a premium area. At that point in time, we could have been looking for sell entries. Why? Because we're in a premium. We want to be selling anyway. And we've seen a 4-hour grab liquidity from above a level. Now, you're thinking of, Jay, that's just a candle there, a flat candle. But on a smaller time frame, have a look at this. Look for that yellow scribble that I've done. Nam, 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 nam. So we're in this 4-hour candle and we've seen this liquidity. As soon as I see that liquidity, I can drop my time frame down and I'm looking for sell opportunities. And if I drop to us 5 minute here, let me put a vertical, no, let me actually put the date in here so I don't have to muck about. It's the 11:30 on the 19th of June. It's 11:30 on the 19th of June. And I drop down to my 5 minute time frame. Have a look. Soon as I see that that liquid, that I'm in that space and I'm looking for sell entries. What am I looking for? I'm looking for indications, corrections, and continuations. Indications, breaking some structure, corrections, continuations. Have a look. If I wanted to be aggressive, that is an entry with my stop above this last high or this high over here. If I wanted to be very, very safe, it's above here. Either way, we're off to see the wizard. All right, either way. I'm showing you the little flex. The flex is that understanding where we are in regards to location, understanding what is it you want to do. So for argument's sake right now, what I want to do is I want to sell this market. Let's imagine that I'm in this sell energy. The market's making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Let's go to our 4-hour candle. This at the moment right now is not necessarily our 10 to 2 candle. Okay. It's not there yet. But even in that energy here where we are, we can see this candle wicking up here. This has got another 48 minutes for it to close. I see this with more wick than body that I grabbed liquidity from above these levels. I'm going to be dropping my time frame and looking for a sell entry. I might not get, after this candle close, I might not get a sell entry until somewhere over here. But when I see that sell entry, I'm in. Because on a 4-hour time frame, it's going to look like a nam grab of liquidity. Yeah. And then I'm looking for potential sell entries, but from the correct location. I can't be looking for sell entries when we're in a discount. I'm looking for sell entries when we're in a premium. Yeah. We might see in the next 10 to 2 candle that the wick comes and wicks all the way above here and grabs liquidity. I don't know. We may see that. Okay. So this is why actually in this instance, we're in a premium. And I'm seeing this wick here, but we still got 47 minutes for this 4-hour candle to close. For all I know, this 4-hour candle closes like a big green solid candle. All right. I'm giving you the source, but I'm showing you that it's combined with your underlying understanding of the markets. Okay, combined with the underlying. Let's go and look. And like I said, the back testing is so powerful. Let's just go and pick a random pair and have a look again. See if we can see it everywhere. This is how you don't have to listen to me on what I'm saying. Like, oh, I'm not too sure if Jay knows what he's talking about. Cool. What you do is you open up your charts, you take the strategy or the information that I've been telling you about, and you backtest it for yourself. You see for yourself. You do your own research. You become the master of your own destiny. You say, you know what? I'm not going to take Donnie's word for it. I'm going to go and look for myself. And I'm going to learn for myself. Okay. So let's just say there's a range like this. It's not a great range of the way I've drawn in, but I'm just showing you. Let's imagine that we're here and we'd be looking for buy opportunities from a premium. This would have been a level, right? Where there's some real liquidity underneath here, right? Where this dot is. There's liquidity underneath that level. And we're looking for a buy from this great discounted area, which is down here. When I see that 4-hour candle, let me look at the time. Look at the time between, this is our, no, I'm lying. I'm just going to just start hyping. Well, we're close enough. We're in here, all right? Just before that time period, all right, a candle before, we're getting this long-ass wick, grabbing liquidity and closing back up here, showing us more wick than body. At that point in time, that's your green, that's your signal. I'm putting this yellow line in so we can remember where it is. We're at February, we're at the 1st of February at 6 a.m. I don't know if I'm going to get the data here, unfortunately. Hopefully we do. Let me drop my time frame all the way down to my 5-minute. Let's see, are we going to get it? Are we going to get it? We're not going to get it. No, we're not going to get it. I thought we'd get it. Maybe look at a 10-minute time frame. Give me half as many candles for it to populate. Yeah, have a look. I'm gonna have to look on the 10-minute, no problem. I'm looking for my buy entries. What am I looking for? Have a look. This would have been the last. This could have been, if I was to draw some lines in there, if I can try and do it. Like so. Let me make it a bit thinner. White line. Okay. It's not a retracement entry, no problem. Look, if I was to, if this here would have been structure. You can keep going in here, drawing structure. We've got a lovely indication here above this little structure here. We've got a correction into these levels. We've got a continuation over here. If we wanted to, like I said to you, in this instance, we can see that the safer entry below here kept you safe. The aggressive entry got you wicked out over here. But to be fair, I'm looking at this on a 10-minute because I ain't got the 5-minute information. All right, so who knows? But either way, this place us up below the safer entry from an area of demand, from a discounted price. You saw the entry there, but even if you wanted to look on a 15-minute time frame because the 5's too scary for you. On a 15-minute time frame, I'm also saying, guys, to be fair, this would be an indication all the way over here somewhere. This would be correction. Continuation would be all the way over here. So you'd have a slightly bigger range. But either way, in all instances, you'd be all right. Get at least a 1 to 2, 1 to 3 coming up into these levels. All right, this is with your stop in a safe place. Over and over and over again. It will happen over and over and over again. All right. These are 4-hour candles. We want to look at some previous liquidity. You know, there's some previous liquidity sitting below these levels here. I'll put a dot so you know what I'm talking about. Below here. Okay. At that time period, let's have a look. Where is our little, I'm looking for our 10 and 2. It's in here somewhere. I don't know why the candle's, I can't jump on it. All right. In here, and we've seen wicks coming and grabbing the liquidity and closing up in here, more wick than body. At this point in time, it's my green flag for looking for entries for the buy from the right location. All right, let's go to another pair. Let's have a look. I mean, is it going to happen every single time? Maybe a couple of times it doesn't. But more times out of 10, as you can see me going through here and showing you, you're going to see it. Let's go and look at Bitcoin. This, imagine here, look, Bitcoin is a sell. You're looking for a sell in this bearish energy. Look, if I'm looking for a sell in this bearish energy, I'm on the 4-hour candles. I'm looking for that liquidity to be taken out. All right? Liquidity, let's look at time. I'm trying to see whether the times are going to keep correlating. I don't know why I'm 8, 12. I'm just looking at time. So here's the time frame again. So it's around here again. All right. Obviously, we're on a 4-hour, so it's jumping now. It's jumping. Above this level here is liquidity. You see that wick, eat it, close. That's not a great example, to be fair. All right. It's not a great example. But every single time, look, have a look. I'm going to be drawing where this liquidity is sitting at. 4-hour candle takes the liquidity and closes down below. Once you see it close down below where the liquidity was and not above, you're looking, especially from this location, you're looking for sell entries. Look, you're good. And then when it takes the liquidity from another level, you mean, you're thinking to yourself, or when you get into a discount, you're thinking to yourself, is it time for me to protect my position? I just got into some positions. This morning, I'm not going to lie to you guys. I've taken some great trades in Nigeria 30 and that, and all of them was managed by looking at this and managed by when it takes liquidity, even on a smaller time frame. If I'm in a trade and then I see the market, for argument's sake, is pushing up, and I see it take the liquidity of a level, I get concerned. At that point in time, I'm like, I want an excuse to take my money out. I want an excuse to move my stop loss and bank my profits, because I don't necessarily trade directly to TPs. I trade towards areas that I believe is going to be my target. All right. But I trade to structure, as you know. It's what we do. We trade to structure. So have a look at, for argument's sake, let's look at this GU once again, because it's something I'm going to be trading for the whole day today. Okay. On a larger time frame, I am bearish. All right. Trading from this area here, which is a premium in my opinion. But look at it again. On a daily time frame, this grab of the liquidity. After that happens, the market goes. You see it? After it happens, the wick, the market goes. It happens time. Just look, you could just see it time and time and time again. After it happens, when you see this wick like so, in the right location, the market goes. So at the location, yeah, seeing these characteristics in the right location. All right. If I drop my time frame down to 4 hours, the location that's up here is the premium. In this area is the premium. All right. This candle here has still got 40 minutes to close. But if it closes with a longer wick, it's my indication to start looking for some entries, bearish, looking for indication, correction, continuation. It's got 38 minutes for this candle to close from the right location. Yeah. If I drop my time frame because I want to get a bit more aggressive, I can drop my time frame down and look for it on a smaller time frame. Look for what I'm looking for. Yeah, I can still obviously draw our lines in, wait for indication, correction, continuation on a smaller time frame, but that is exactly the same. You're going to see the exact same thing in that energy when you see the 4-hour candle with a big wick to the upside, grabbing potential liquidity from a certain level. All right. You're just looking in all of this energy, me zooming all the way into 15 minutes. I'm just looking inside the 4-hour candle. Yeah. Which I may be able to get a great entry on a smaller level if I see great structure. Maybe. But that's what's happening. All of this here, looking at this on a 15-minute time frame or 5-minute, is me looking inside this green candle that's happening right now, which has 37 minutes to close. That means there's going to be 7 5-minute candles. You know, there's going to be 37 1-minute candles. There's going to be, 3 or 4 in between that level, 15-minute candles, all within this big old green candle. Yeah. And therefore, when we're seeing above these levels, or who knows if this market does a madness, I don't know what news is happening. We're looking at that time period, the closest place has that market captured liquidity from anywhere. And if it has, we're looking for an opportunity to push in the opposite direction. Look, even in some of these smaller instances where we're seeing, look, this market wicked up here, above this level over here, wicked up and closed back down in here. The next opportunity for the next 4 hours was, look, even here, where the market wicked up here above this level here, the previous 4-hour candle, from the right location, the next opportunity was, do you get what I'm saying? You can see, look, even here, from the right location, which is up here, when we saw this candle come and wick over here, taking liquidity, about not a great example because these are smaller candles, but that opportunity straight when you see it closed all the way back, the body closed back inside that candle, the next opportunity was looking for that sell entry. Here again, we've already done that one. Running down here. From the right location, look, wicked up, grabbed the liquidity above the previous candle and closed within that body. The opportunity was, and if you can see, look at the time. That's our time candle between our 10 and our 2. Yeah? Let's have a look over here. That's our time candle between the 10 and 2. Let's look over here. This is our time candle between 10 and 2. Around here. Have you seen the little flex that I've given you? I've given you guys a gem. I hope you've seen what I've said, what I'm showing you guys. Something for you to look out for. Has to be from the right location, though. You can't just be like, oh yeah, look at this candle over here in the middle of nowhere. No, that doesn't make sense. You're throwing away your other education, your other understanding about location, premium, and discount. Yeah, but I've gone through multiple pairs and shown you guys this, and every single time. So what does that even help you with? It also helps you when maybe you want to be looking at the charts. Maybe you don't want to sit on the charts all day with your mouth open. Get there between 10 and 2. Get there between 10 and 2. Obviously, 2:30, your markets officially open up, but prior to that, they start activating, they start energizing a little bit earlier than that. Let's have a quick look at US 30, then we'll finish up. All right. US 30. All right. Let's delete everything off the charts. Let's zoom all the way out, understanding our strategy, refresh the charts, see where we are. Well, this chart is evidently a missile, all right, making higher highs and higher lows. I've just taken into consideration our two events, which are COVID, crash it and crashes, all right? Even if we ignored those events, and there's this subtrend happening in here, okay, can you see that? I'm zooming all the way out, all right? And if we wanted to, I'm going to do this from COVID, make it an angle like so, just in case the market has changed, the world has changed, and that is going to be the new angle. Let me make it a color, and I faded it out. Even if that's the scenario, have a look, which I don't believe, to be fair. Let's drop our time frame down to our daily. Let me refresh that again on our daily. All right. And now we can see how this market has been trading within that white range. But within that right range, we also have, now I'm a bit smaller, I can make it more accurate. We can also see the energy, like, for example, if I touch from here to here, let me make it brighter. Let me make it pink. This could be a range that the market's trading within. Look, ping. If you can't see it, I'm showing you the path. Ping, pong, ping. Are we ponging now? Well, the market's broken structure here bearishly on daily indication, made a huge retracement back up in here to an equal high. So it's no longer an indication. It's more, say, sideways energy in here, like so. Okay. Let's drop down to my 4-hour. Now, the problem here is this market is consolidating, it's going sideways, but even on a smaller time frame, we can see the same things happening. We can see the markets, as soon as they get those wicks to based upon where the right location is, we can find some entries. Now, in here, to be fair, this is what it looks like for me at the moment, that this is an area of premium. Make it red. And this is an area of discount. Make it green. That's what's happening at the moment. The only issue is above these levels, what's happening? If I put a little line in here like this, what's happening above these levels, that level over there? What is occurring above this?
Liquidity.
This liquidity above these equal heights. Well, we know there's also liquidity above all of these little levels. That's why we're getting these little reactions. But there is a big liquidity pool over here. There's a big liquidity pool above here, which, in my opinion, if this market wants to go down, even if it wants to go down, I feel that it may first eat that liquidity and do that. Yeah. Now, whether that happens today or not is something completely different. But I just think that's going to happen. Now, if we go and look here, that within this range, this market has been making these higher lows within this range. Okay. On a 4-hour time frame, look at this, for example. If I scoot down and I show you that right now, obviously, the market came down here and now it's pushing up here, and this little impulse, this little range in here. But I'm saying even like this, you can see, because we can see this range, like this, market pinging, ponging, pinging, ponging. Look at it on the 4-hour time frame. If we're looking at from the right location, we're looking at location scenarios here. All right. Let's say, for argument's sake, we'll draw some lines in like this. We're going to have to drop maybe to a slightly smaller time frame to make it obvious. Look at the time, 10 and 2. Between 10 and 2, I'm seeing liquidity below these levels. Prior to that time, I'm seeing the market take that liquidity with a wick, then closing up within the previous body. Yeah. This one even closed bullishly above that body. What am I looking for from here? Buy entries. Let's go over here. Look at the time. All right, look at the time. That 2 o'clock level over here. This candle is representing a level. And you're thinking, but it just looks like one red candle though. On this time frame, if I drop my time frame down, this is going to look like candles coming down, creating a low. We've seen the liquidity taken, the candle closing above within the body, didn't close down here. It closed within this red body. I'm looking for buy entries, right? Because I'm from a discounted place, location. Every time I'm just opening these up random. It's just random pairs I'm opening up. Every time. Yeah. Let's have a look over here. The market is making some wicks. Again, look, all of these wicks, this wick here below here, captured the liquidity below here. And then the market had a reaction because it's mucking about at the moment. But even in its mucking about, it's still doing the same stuff. Look, there was liquidity below here, this wick, ate that, and then run the opposite direction. It's still, even in its messing around, it's still doing it. This little push down here, so look, grab this liquidity below here, it's pushed up over in here. Now, this is a bit of noise, but even like I said, within that noise, because when we came and we pinged all the way to the top of this level here, this is the range between here and here, maybe this market wants to come down and get to the pong. Maybe it wants to pong down here. And if it does want to pong down here, look at this time. Look at the time of this candle over here. Our 10 and 2 candle on a 2-hour time frame, this one is. All right. This market is pushed up here, wicked in here. Actually, maybe not the greatest example. This ain't maybe the greatest. I'm going back to my 4 hours. Better. This candle here, 10 and 2 candle. Look at the wick. Pushed all the way up in here, grabbing all the liquidity. This was a big liquidity grab above here and above here. And even, no, not there. But as soon as that candle closed all the way back down in here within this body, lower than this body, where the opportunities was to look for sell entries. The only problem is the location's bad. The location's bad. It's kind of in here, which is in the middle of a range a bit. So US ain't really given too much. Let's go have a look at our GU quickly and then we're finished. All right. Otherwise, the passions will take over and I want to be here all day looking at this. Let's go over here. Do that. Let's hit refresh. Yeah, guys, look out for this. We're waiting 27 minutes for this candle to close to see, is it going to close all the way down here? Maybe it might close up here. And then the next candle is going to do the damage. The next candle, maybe. All right, the actual 10 to 2, because this isn't the 10 and 2. This is the one before the 6 to 10. The 10 to 2 might do the damage above this area. Yeah. Doesn't mean you can't take trades from before on a smaller time frame. You could do. But ultimately, from this premium area, which is respecting structure, obviously structure all the way up there, the market might have a little liquidity grab, and then hopefully we'll be able to see this. Or if not, and the market starts doing something different, that's fine. We trade what we see. All right, but I've just shown you how you must pay attention to this liquidity energy, and that 10 to 2 candle, yeah, is a real hit zone with a lot of pairs. Okay, and we know why. We've explained why. All right, guys, amazing day. All right, start of the week. I know people are getting ready and trying to sort out their life and do certain things, but those of you who are here, remember, it just might be that one thing I say to you that makes things click. Like, look, it's I'm the same things I'm teaching you has me 8.5 grand up, and it's 9:30. It's not like to say I'm teaching you something that I'm not implementing in the market. All right. They say and that's just one of my prop accounts. All right. And if you want me to show you, I'll show you, because obviously sometimes I think people need to see it. There, that's one of my, that you can see on my screen. That's this morning. This is all today. It's all the same date. Have a look. It's all the same date. All right. And it's not because I'm doing something that I'm not teaching you. I'm doing something that I'm teaching you. I'm not trading based upon faith. Yeah, and every day you see, or whenever we analyze the market, more day, I'm gonna say every day, more times out of 10, we've done some deep analysis. I'll put the analysis in the group and show you, look at the trade, look what it's doing. Yeah, and it's not based upon a different strategy, it's based upon this strategy. But I'm disseminating to you guys the little bits of source that you can use. There is no one thing. There is no one. Someone say, "Oh, well, just teach me one thing for me to." It doesn't work like that. I can't stand when I see like these things like, "Yeah, boom, at this time and that time, just do this and that." That's not you learning how to trade. Learn how to trade and understand that those things do add source. You know, when you go and pick your apple, you are looking for an apple that isn't got no holes in it, but you're also looking for an apple that may be the right color. You're also looking for an apple that, you know, boss man, when did these apples come in? You're also looking for an apple that maybe ain't got too much wax over it. Or you're also looking at from an apple from the right shop, because you know if you go and buy it from Tesco's, it's going to be mad. You might have to buy it from your organic shop. You're also looking for that organic label. You're also looking like, it's not just go buy me a nice apple. On the Mondays at 2 o'clock, reach for the apple at the top of the pile. That's going to be the best apple. Well, that's nonsense, isn't it? That's not the case. It's the case you got to know what you're looking for. So when you go and get those fruits, you go and get your watermelon, you go get whatever it is you're going to go get, you know what you're looking for. There's someone out there that's holding the watermelon, they're tapping it. There's someone out there holding the watermelon, looking for that big yellow patch on it. There's someone on a watermelon, he's doing the next test on it. Someone else is asking, where are these watermelons from, boss? What country did they come in from? Because if they come in from here, I'm not interested. But if they're coming from there, I am interested. This is the same with trading. So therefore, you know, you understanding the fundamentals and then understanding these bits of source that I give to you, it's for you to go and check and test them, or you to ask the questions and go, Jay, can you show me that again? Or can you make me understand that again? Because every time I see this liquidity being taken by this wick around this 10 to 2 area from the right location, it gives me a great signal and flag to find my entry. Every time I see it, Jay, over here, and I see that candle wick and then closing all the way back up in here, it gives me a great opportunity to look and wait for my entry from a right location. I'm saying to you, the point I'm making to you is that you have to go and do the work. I can give you the tools, but you have to do the work. If you're not quite taking trades yet, ask yourself why. Open your demo account if you don't want to put no money to it, or furthermore, open a prop firm account and only get a 50K account for 50 quid or something like that, or 30 quid. If you don't want to invest in yourself to see what you can and can't do, even if you lose, when you go to the gym and man stack the weight, there's a very high possibility you don't get out your whole 10 reps. But now you've learned so much that you did 5 of them. You did 5 reps with, 40 on each side, or 2 plates on each side. Now you know where your targets are. You want to get to you meant to have done 8 reps or 10 reps. Now you know that you've got a weak shoulder. Now you know that weight's too heavy for you. Now you know that you need a spotter. You need someone to spot you if you put on any more than one plate or 2 plates. You need someone holding the weight if you drop it on your face. How did you know that before? You didn't know. So you have to test your abilities. And it's not just about winning. It's about learning. You only have to win once. Let me say something to you guys and we finish off like that. You only have to win big once. What do I mean by that? I mean that you could be a businessman or businesswoman trying for many, many, many years. You only have to get one Amazon. You're that, footballer. You've been trying for many, 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 many years to be a great footballer. You only have to get scouted, and get signed once. How many times did you not get signed? The guy come to your match and see you play and you didn't get no call. He didn't pull you to the side or your parents to the side. It's only once it needs to happen. All of a sudden you're like, bro, yeah, I play for Liverpool, I play for Arsenal. Man, like, wow, man, how did you do that? By being in the game, being present, being there, being on the pitch. He's not going to get scouted if he's not on the pitch. You guys are not going to learn to trade if you're not taking trades. That's it. I can't make you take trades. I can't make anyone be here in the morning. But I can only say to you that there is not a problem with losing. There's not a problem with trying things, trying to execute based upon your knowledge. Remember, education without application is just entertainment. What does that mean? That means you can read a book on how to do all types of things. If you don't apply the knowledge, it's just entertainment. It's like you watching, cartoons that came on midday. It's just entertainment. But if you apply your knowledge of how to, I don't know, whatever you've been reading, create an e-commerce business or do that now, this is when you're a dangerous man or woman, when you can take education and apply it. Just looking at it is just entertainment. As much as you're sitting here and watching the trading, you could be watching something else. It's just entertaining to you. Enjoy it. But if you don't apply it, who cares? So you must apply it. Can't make excuses for not doing the application, because I was going to say the worst case scenario, but really the best case scenario, you're going to learn something. And all you've got to do is manage that pain. So don't go and put your whole life savings into a trading account and blow it, because you might not be able to manage that pain. But at $50 a pop or $100 a pop for a prop firm challenge, I'm not going to lie to you. I cannot leave my house on a weekend with them 2 hurricanes and not spend £100. I got to put petrol in my car. That's £100. Yeah. They want food. That's 40, 50 quid. Then they want drink because it's hot and they want ice lollies. Yeah. The point is you're going to spend that money anyway. So why not spend it on something that you've been learning and that has the potential for you to take attack? I said, I'm going to say something to you guys. You see, in this financial crisis, I know for a lot of people, things are hurting and it's getting difficult and it's tough and things are getting tight. But let me tell you something. You cannot play defense. You're not going to defend your way out of the situation. You're not going to save your way out of not going broke. You're going to have to play attack. You're going to have to find something that's going to make you an income. You're going to have to play attack. I want this to sit with you. And, if you're going to put up on your status, it's not defense is this going to allow you to do. You can't block your way out and win the boxing match. I saw Jason fight a few weeks ago. If Jason curled up in the corner, even if his blocks were fantastic and no punches get through, he is not going to win that boxing match. He scored no points, even though his blocking was tremendous. He's not going to win. He has to play attack. So the little money that you've got to look at it and think to yourself, what can I do to play attack, to give myself a chance, a hope in hell of winning this match, of throwing some punches? And if you're here every morning learning this tremendous skill, you have to be in the game and fail your way to success. Forget about all the podcasts you watch. Yeah, man, I did this, and on my first attempt, I did that, and I did that's fraff. That's lies. Why is it lies? Because how many things on your first attempt do you ever get tremendously correct? I don't know anybody out here who's done it before. And if you have done it, it's a fluke. What are you saying? You've never played chess before, and the first time you played chess, you beat the grandmaster. Really? You've never kicked football before, but the first time you kick football, you put the ball top corner. Really? So remember, do not get paralysis analysis. Do not try and go for perfection. Perfection doesn't exist. And things that people believe are perfect are not perfect. They're quite sinister. I want to see a girl with a spot on her face, or something a little bit. I want to see that she's not an android. She's not AI. She's not some robot. I want to see her imperfections are her perfections. You're not perfect, but your imperfections are supposed to be what make you appealing, attractive, different to the rest, unique. So I'm telling you, manage your funds or your resources, but you must play attack. Whether that's, you want to set up your e-commerce business, set your e-commerce business up. You're not going to make any money from your online business if you don't set it up. Yeah. So right now we're talking about trading, play attack. There's no reason why someone ain't got a funded account. Funded accounts don't have no time limit on them. You don't have to do them in a month. You can go and get a 50K account, which I think for some of the guys, I've got an account at the moment with they call it again? ACG, what do they call it again? I can't remember what they call it again. I've gone blank. Alpha, sorry, Alpha Capital, yeah. Because they've got a smaller target on one of them. Yeah. I've got my FTMO also. Okay. FTMOs also. But there's no reason for you to have that account just sitting there. 50K account. Costs you about 50 quid, I think, 60 quid maybe when you convert it back. And when you get the opportunity to, you play. And if you blow your account, who cares? You're going to spend £50 or more going on somebody's birthday that you didn't want to go to because you went to the restaurant. And then when they split the bill, they said it's 50 quid each. And you're just looking at your partner like, Rush, I stayed at home and I should have traded. Because at least with my trades, I would have had the opportunity to play attack and make some money. All right, guys, good morning. Amazing day. I'm going to put on a video. I'm just having a look and see what videos have come up. I'll tell you what we're going to do. We're going to watch my guy from the Coin Bureau. Remember Guy? We ain't watched him for a little while. I like his content. He's normally around the crypto space, but he does spill over into, other spaces which are very, very relevant. So I'm going to put that on, and I'm going to wish you guys have an absolutely amazing day today. And remember what I said, in whatever you want,
when it comes to
whatever it is you want to achieve, more than likely, you're not going to block your way. You're not going to defend your way to success. Yeah, it's very unlikely. It's very, very possible. Whatever you want to do, you want to get a smaller waistline. You're not going to be able to just sit at home and say, yeah, I'm just going to stop eating this and I'm going to get a smaller waistline. No, play attack. Stop eating that and go for a walk regularly. That's you doing something to make something happen. You're not just defending. You have to play attack, guys. All right. Good morning. God bless. Amazing day. In fact, not good morning. Amazing day. Have an absolutely fantastic, fantastic day. Go fulfill your potential. And let me stop this.